Welcome to MTRS_Market Pulse. Today, July 16th, we are covering the top 5 Indian stocks making the biggest moves across auto, banking and financials, infrastructure, pharma, FMCG, one standout name from each sector. Let us break down today's biggest sector movers, one at a time. First up in auto. Tata Motors is down -2.70%, trading at 333 Indian rupees. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. India passenger vehicle market share and EV penetration, particularly Nexon EV, is the domestic growth story. JLR's transition to full BEV by 2030 requires significant capital but positions the brand well. Any update on the next generation JLR platform timeline would be a catalyst. Moving to banking and financials. SBI dropped sharply -2.08% to 1,015.40 Indian rupees. Equity markets are responding to reports that India's inflation moved back above the RBI's 4% target, Finamize. Return on equity improvement, now approaching 15%, is the re-rating story that has driven the stock higher. Government infrastructure capex lending is a low-risk, high-volume growth engine. Any NPA reversal or write-back announcement would be a positive. Moving to infrastructure. Larsen & Toubro is down -2.03%, trading at 3,848.70 Indian rupees. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. After today's weakness, the $3,733.24 area is the first meaningful support level to watch for Larsen & Toubro. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Moving to pharma. Sun Pharma climbed +1.57% to 1,951.50 Indian rupees. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. The near-term technical picture for Sun Pharma looks constructive. Watch the $2,029.56 level as the first meaningful resistance zone. A close above there on decent volume would be an encouraging sign for bulls. As always, this is analytical commentary, not financial advice. Moving to FMCG. Hindustan Unilever dipped -1.31% to 2,102.60 Indian rupees. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. After today's weakness, the $2,039.52 area is the first meaningful support level to watch for Hindustan Unilever. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Now let us zoom out to the broader macro picture for Indian markets. The rupee is strengthening against the dollar, trading at 96.25, which matters for import and export-heavy sectors alike. Foreign institutional investor flows remain the key swing factor for Indian equities in the sessions ahead. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. We cover every major global market, every single day. If this kind of daily, actionable analysis is useful to you, please support us with a like and subscribe. It takes 2 seconds and it means a great deal to this channel. Share this with anyone who invests or trades, they will thank you for it. That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor. Trade safe and we will see you in the next one. That is today's top 5 Indian stocks from MTRS_Market Pulse. Subscribe for daily sector-wise coverage of Indian and global markets.